Cryptocurrencies are taking off. Who hasn't heard of Bitcoin? And now governments all over the world are eager to get in on the digital currency game. But can they even do that? I'm Catalina Margulis. I'm a lawyer at the IMF, and I'm here to answer the question: are central bank digital currencies even legal? We all think we understand what we mean when we say money. A dollar bill is a dollar. A euro coin is worth a euro. But that paper in your wallet and that coin in your pocket are based on a complex legal framework that goes back centuries. Legally, all banknotes and coins issued by a central bank are a form of debt that central banks have to honor. And that is something cryptocurrencies do not have, because they are not official currency. So who or what defines what real currency is? That's up to each country to define through special laws that regulate their own currency system. But these laws were written before the world went digital. And this is a crucial point, as there are repercussions depending on what form CBDCs would take, whether they are account-based or token-based. Account-based CBDCs would mean that central banks will allow the general public to open cash current accounts with them, the same way as it currently happens with commercial banks. This so-called book money model is sold as central banking itself, with firm legal standing in most countries. And in most countries, this book money is not legal currency, but it is a form of debt of the central bank. Other central banks are exploring designing CBDCs in the form of a digital token, not connected to an account relationship between the central bank and the holder, similar to banknotes and coins. And token-based CBDCs do not have a legal history, and its legal status is not clear. But let's go back to our central question, which is actually two questions. Does a central bank in a given country even have the legal authority to issue a digital currency? And is central bank digital currency in that country? To the first question, we surveyed the laws governing central banks in 174 countries to find out if they said something about CBDCs. For 61% of countries, the law only authorizes the issuance of currency in the form of physical banknotes and coins, meaning that token-based CBDC is not a legal option at this stage. Only 40 central banks have the clear authority to issue CBDCs. So only 23% of central banks in the world can issue token-based digital currency without the need of a legal reform. And for the remainder 16%, the law is simply not clear. And what about account-based CBDCs? This will mean that the law allows private citizens to hold retail accounts with a central bank, and only 10 central banks out of 174 can do that. Let's go to the second question. We have been calling them central bank digital currencies, but are they in fact currencies? To be a real currency, a means of payment must be considered as such under the country's laws and be denominated in its official monetary unit, like the euro or the Chilean peso. And for money to be considered currency by a country's legal system, there are 5 criteria. First, it has to be issued by the central bank, so they would be the only ones allowed to issue true digital currency. Second, it has to have cours forcé, meaning that the value of a banknote matches whatever amount is illustrated or written on the note. So a $10 bill is worth $10, and this won't change with CBDCs. Third, it also has to have certain privileges under private law to facilitate its circulation in the economy. But there is no consensus on the private law status of an intangible asset like a CBDC. Fourth, currency also has to have criminal law protections against damage or counterfeiting, a protection that does not currently apply to digital forms of money. And fifth, real currencies have legal tender status, meaning that it can be used to pay and extinguish all debt, public or private, and that creditors are obliged to accept it. This is why legal tender status is given to means of payments that can be easily exchanged and used by the majority of the population, typically banknotes and coins. And there's also the question of access. Obviously, for CBDCs to be any use, digital infrastructure is a must. But governments cannot force their citizens to have digital infrastructure. So granting legal tender status to CBDCs might pose a challenge on that point. But if they are not legal tender, CBDCs do not meet the legal definition of currency. What does this mean? In sum, most central bank laws simply do not allow central banks to issue digital currencies. And even though they are called central bank digital currencies, they are not currencies. And this is not a simple legal technicality. It has practical consequences policymakers cannot lose sight of in the race to develop CBDCs. Otherwise, they could face serious legal, financial, and reputational risks, and even questions on fairness and financial inclusion. Even so, this might not actually be a deal breaker for the future of CBDCs. Chances are you have been using something that is not legal currency to pay for things most of your life. Debit and credit cards and digital money transfer apps are not legal currency. But as countries race to develop viable digital currency, it is important that we are clear on the legal language and its consequences.